Hey everyone, my name's Andy. I'm from Finding Value Finance. I'll be your host today. We're lucky to have Patrick Karim from North Star Bad Charts with us. Wanted to bring him on, talk about what's going on in the market, specifically uranium, because that's just been hot. The energy markets seems like they've been killing it. Would like to get your opinions around all that and maybe even gold and silver, because like we said before, has there been a bull market in energy and not one in precious metals, just like you said. So, Patrick, what are you seeing in the markets? Well, number one, thanks for coming on. Appreciate it.
It's my pleasure, Andy.
I like diving right into stuff. So, what are you seeing in the markets? What looks hot? What looks not? And
All
so
right.
forth.
Well, all great points. If ever I go too far on a tangent there, please reel me back in. But some of the comments of the people they like when I just go somewhere like it's your thought process, and that's what's good when we talk is we get to uncover answers to the questions you had, but sometimes we uncover new questions. And after the interview, sometimes we could try to answer it live. I'll go in the live chart and we'll try to answer that question. But sometimes it's just questions that I'll answer later. So then we give another interview. Look, let's start high level, guys. I'll share my screen. Let's go right at the charts. No nonsense. I was doing this chart, guys, today, and look at this thing, guys. This is just bonkers. NASDAQ divided by uranium miners. Let's go at the head of the Hydra. Look at this thing, man. That thing, NASDAQ was in a beautiful uptrend versus uranium miners. And now broke down below a 1 and 3 year moving average. Tried the cloud, tried to bring it back up. Couldn't do it. Below the cloud. Now it's refused for 4 months. It refused the 3 year moving average. Now it's declining, containing the momentum. So this is paradigm shift type of stuff. This is US equities. NASDAQ had a chance above this line here. You say, okay, something's wrong with the uranium sector, or not that it won't go up, but NASDAQ is going to go up faster above this line. And even that, but right now, that's not what happened. It's going down now once again. So what's morphed into existence is actually probably a bullish expanding wedge in favor of tech stocks. But this is the beauty of an expanding wedge. You cannot play it until it actually breaks out. So here you have some type of expanding channel. And you got to remember, often these downwards channels, they expand because eventually there's some type of capitulation bottom where the volatility goes crazy, and that's where bottoms are formed. They're not formed in a channel and it just breaks out. These are more common. So you'll find a bottom somewhere. I don't know where. We're going to have to wait and find out. Is it going to be here? Maybe there's a little support here. So this is how you can imagine. If this next line of support here fails, it could go back up here. But if it fails, eventually, have some type of bottom maybe here, and then a base. And then after that, but look at that. We're in 2026. So this sideways grind of NASDAQ not being able to outperform uranium is beautiful environment for uranium miners, gold, silver. We'll show you charts there. Like you said, if this is a secular bull era for uranium there, when we're talking about years, it's a big bull era. If that happens, gold, silver, your energy, they're all in bull eras there. That's what evidence has shown us, because mostly what they track, these energy plays or these commodity plays, what they track is the destruction of purchasing power accelerating. And it's universal. If it falls on your foot, it hurts. That stuff needs to price in the fact that your fiat dollars cannot purchase as much of it as it could before. So this sideways grind, or let's say here, I don't know, maybe it goes here, even this, anything below this descending possible trend line, because that was a violent bounce up here. Anything below here, no matter how it plays out, maybe here, could drag it up here, that is bullish for uranium. Uranium, you get bearish probably when this thing breaks out here. You know what I'm going to do? I'm going to do it versus Cameco to show you guys, because Cameco has a little bit more of a history. Let's go Cameco. Oh my goodness. What? It's totally melting down versus Cameco.
It's ripping it.
It's almost like the future of URA. is kind of chemical showing you how that thing's just this is what it looked like back in 2000. I'll put some what kind of thing here? Yeah, in 2000 it was pretty violent, and as long as it was below the 3-year moving average, and even in below the 1-year moving average, that's how powerful chemical was in the 2000 bull run. It never got back above the 1-year moving average. So what we have, oh, man, that's just bonkers there. Until this happened, chemical, uranium, gold. Here's where gold actually topped in silver. That was just beautiful for all these commodity plays. So we're right here, guys. Look, we're exactly in 2001 right here. We're exactly the same place. So until this breaks out, it's not just that needs to break out, because I'll show you what usually work plays out. Let's say this goes down. I don't know where it's going to go down. Even if it breaks out here, that doesn't mean you go long, because that's just the first wake up, right? It's like a tech stocks did versus chemical back here. It breaks out, but after that, it's not V-shaping. It needs to, you know, bloop, bloop, like the pebble there. It bounces less, or the basketball bounces less and less. Then after that, when you have a beautiful coiling, you break out. So what's probably going to happen here? Something like that.
On the side of the chart, is that the volume?
Yes. So that's the volume.
So we could go all the way down to that volume, kind of, most
Yeah.
likely.
Yes. We got to be careful, because that volume, that's a huge volume to find base. Yep. Because the price points are lower, there's usually more volume at lower price points. So let's say you want to push $1 billion. Well, if the price point's lower, you're going to do more transactions, right, to fulfill your order. So you got to be careful. So here's one. Oh, hold on. I'm just going to remove the labels here. Labels, name, price. Okay, here. I could show you here. I'll take it out. I'll show you here. Here is probably, yeah, here's one, and we're right below it. So we just fell below this volume defined node there. Yeah, you're right. Here's the next one. Yeah, it could start slowing down anywhere here. Could start slowing down there like that. It's like you could see that as a cushion, you know, a dampener. It's that volume is gonna. It's support, you know. So you better. That's probably where this is heading before it actually starts slowing down there. That's how much that's still left in the gas tank for Cameco to outperform NASDAQ. That's pretty impressive there. The best time to get in, a lot of is past us, you know. It's like it's been a while there. Like so many, like there were so many clues. You can hear this less slanted line there. There were so many clues that you had to be long Cameco a while back, but it's not too late yet. But it is getting stretched, Cameco, even on its own chart. So you got to be really careful there. What's going to happen next? It could be a pullback. You could start getting trapped. But the long-term roadmap is there's still a lot of room down there for outperformance of uranium versus tech stocks. Look, I'll overlay. You know what? I'll overlay gold, or I'll overlay silver. Hold on. I'll do Cameco. Let's do it this way. I'll do Cameco versus NASDAQ. And then, oh yeah, this is so beautiful, this one. Look, it's the flip image of the other one. Bull arrows start here, the end here. They start here. Oh my God, it's above the breakout line. I just saw that today. It was right below the breakout line this morning. If it closes the month here, that's a bull flag breakout. Look where we are, guys, for crying out loud. Seriously.
It's the Lamborghini zone, right?
Well, we cannot encourage people not using sound risk and money management. But look at this. Look at silver, how it tracks that stuff there.
Oh yeah.
You see, look.
It follows right behind it.
Yes, and it kind of lags. See how Cameco outperformed NASDAQ way before silver took off. So silver, I don't want to say it's imminent, but here's silver in the year 2000, 2003. Cameco was already on a run versus, so it's very positive that we could be here in these pullbacks here. I don't know where silver is going to stop pulling back, probably after the
Yeah, we're
markets.
close.
We're
We're
close.
close. We
And
are
look how,
maybe a few 6 months, 3 months, whatever it
yes.
is.
So this is
Um,
very encouraging when you zoom out and you see that the ratios as defined by Cameco versus NASDAQ, silver tracks it. We're in this area here there. Silver has been consolidating, NASDAQ, Cameco has been consolidating. So as soon as that starts flipping higher, it's, yeah, look at that. It's just beautiful. And
pretty
the
game
precious
on
metals,
for
yes. And gold, silver, they close up the show in all of this. So usually gold's a good flagship, gold's probably one of the first ones to really open the doors. Then it just silence itself. But after that, energy goes bonkers, and energy is actually the ones that make the whole pyramid implode for the U.S. stocks. And when energy, it's ends their bull run maybe a year or two before U.S. equity, before gold and silver. Gold and silver, they go parabolic in the end game scenario there. So I don't know, where are we? Do you like baseball?
yeah,
What
I do like
inning do you think
baseball.
we're in?
Which asset? In
Oh,
precious metals, I think we're in the early innings. In
yes,
uranium, we're a little bit past the early innings. Like we're starting to
yes,
hit the game here. The
yes. Because I'll tell
game
you,
has
look,
begun.
this is a critical
Now,
chart.
here's a question for you. During that silver outperformance behind uranium, did we see really good gold and silver mining companies take off at that same time
Uh,
during the 03-ish time frame to and onward?
yes,
Because
yes. It tracks. I'll remove drawings. I'll remove my silver chart. Just remove a little bit of the noise. I'll just leave Cameco versus Nasdaq. Remove the cloud. Remove the volume here. Here I have the ASA chart. The ASA chart is the gold and silver miners index.
oh man, so it ripped it too, just behind
Yes,
it a little
yes,
bit.
yes, yes. And it had a, so it's also going to get those those tailwinds as defined by
Yep.
ripped higher, pull back. So it, man, yes, yes. Yo, the all go hand in hand, this stuff. And that's why I don't know, I mentioned this on another interview, is people always look at the CEOs and how much oil that company has under the ground, how much gold, silver, how many ounces, all that stuff, input costs, like all the mechanics of whatever. For me, that's, I save myself that step, because all I have to do is look at the price chart. I see that the miners as a whole, of course, somebody could probably snipe, like really choose the greatest company of the greatest ones. But overall, the performance of the gold and silver miners is defined by capital flows leaving growth towards hard assets, commodity, and like it's that's what's driving. Look, I'll have the proof in the pudding. The proof: gold versus SPX. That's another massive chart to look at. Reset chart here. So here I have the gold and silver miners ETF since 1968, the ASA chart, and it's an index. So they're actually getting rid of the bad mining companies, and they're always keeping the better ones, right? So this is probably one of the like better cases. Look in the 70s as gold, and that's the candle chart behind, guys. Gold was breaking out versus SPX. Look, like the miners track that for practically perfectly. It's like, and it even held better than gold, as gold was really plummeting versus SPX. Well, the miners too, they had a hard time. But look at
So I
that.
mean, one could conclude then that some of these like silver junior companies, they could be the best priced ever, right? In terms of undervaluation. Because I mean, if you look at like XAU to gold ratio or any of these different ratios, I mean, they are just pummeled into the dirt.
Yes.
So
Well, that's something that's cheap. You could get it it could get cheaper. So you really, really got to make sure. You have to wait for gold to break out here. You have to. If this, look, because that thing actually broke down here, guys. It actually broke down. So what we're waiting for is some type of swing low here, I don't, hopefully it doesn't go all the way down here, but any type of higher swing low, and it's super, super bullish. And just that run, guys, here, this is the 2018 run, all the 2020. And when gold broke out here versus SPX, the miners went bonkers on this. Look, I'll just drag it down. Look how the miners went bonkers here, how they attract to perfection gold versus SPX. So you don't need much, just gold versus SPX doing this little roll map here. And the miners will be back at the wall here. They'll be they'll be at their 2020 highs, and hopefully they'll be even higher. But you got to wait until, you don't need to wait much more. You just need to wait for gold to stop going down faster than SPX. And this is key. I know we've probably talked about it. The .5, when gold is worth half of the SPX, that's a critical historical moment. That was the level we had in 2006. That's clearly a wall right here. And the fireworks are around the corner, but it's so encouraging just to see what the uranium sector is doing, that we could even look at oil now and show. So now we have oil and uranium going bonkers.
Yep.
Oops. What happened to my pictures? NDX divided
That's where we were
by
going.
X.
We're going to the moon.
This is oil, NDX divided by oil. Maybe SPX would be better. I might have more data. Look at that thing. Jesus. I'm not even on. So that line, 1, 2, not super convincing, but there was clearly a top here that was broken down. Wait, I'll put my Ichimoku cloud. Yes, that looks super bearish. So now you have a massive top here. SPX back in 2019 broke out versus, or XOP, guys, it's the oil and the gas producers, explorers, broke out, fine. Double blow off top, marginal new high, and that's bearish, really bearish if you're not able to maintain that momentum expansion. Breaks down, retest from below the 1-year moving average, breaks down, starting to define that wall here. There's even another wall right above here. That breakdown, support becomes resistance. Below the 1-year moving average, below the 3-year moving average, broke down below, trying to go back above the 1-year, the 3-year overbearing, creating a lot of pressure. This is how growth stocks have been destroyed by oil since. Look, I looked at that chart. Oil, oh, you know what? I'll head over to my Twitter. I'll head over to Twitter. I'll show you this chart I did. I think oil, these are the 3 greatest moments in the past 7 years in the financial space. So it's essentially SPX versus energy. Look at this, 1949 to 1969, 20-year bull run for US equities, destroying oil, breakdown, violent rally up, couldn't regain that momentum. And look, somebody told me this was the oil embargo there. Look how it just fell. Look at the gap down. But
that's a gap.
I think even if there wasn't any oil embargo, Andy, I think it was still going down anyways.
Agree.
Yeah, it was going down. It broke down momentum, broke everything. 1992 to 2002, beautiful bull run for US equities. Blow off top in 99 or 2000, not quite sure where. Echo bubble, can't make it high. What happens? Timber. 2008 to 2023. This looks to be the all-time blow off top for SPX versus oil. This negative oil thing, that was just nonsense. I don't know how will ever SPX going to outperform oil that much ever again. I don't know how that's going to happen. We'd have to go to negative oil again for some type of thing like that. But right now, it did a violent rally back up after going down here in 20, when oil started peaking there before it started going down in 2022, maybe. 1, 2, 3, 4, 5-point trend line. And now it's trying to turn back down. If that thing falls, it's 2001 all over again. Yeah, 1969, 1970 all over again. And you know what happened there? Gold, silver, uranium, they all went bonkers. Miners went bonkers. Yes. Look back, guys. Try not to get shivers like I do every time. When I was drawing that chart, I had some shivers. I said, look at this. This is paradigm shift stuff, man. It's like we're going to know soon. Is it going to go hit that line? And that line's also, there's a resistance, a support line here around 42. It's probably going to do a small bounce here. But if ever that horizontal imaginary line that I haven't drawn here fails, that's probably when gold breaks out versus SPX. That's where everything goes bonkers. And that's probably going to happen maybe after the US equities start rolling over a little harder. Yeah. And initial claims start rolling up a little hard, a little more violent. I think that's probably what's going to happen. And in that wake, when they start cutting the rates, now people think the markets are going to melt up when the rates get cut. But I think the next time the rate cut, there's rate cuts, I think everything implodes. Yes. Because
totally
that's what it's been the recipe. In the bull era, rate cuts from 1980 all the way to 2000, there were tons of rate cuts. The market kept going higher, right? Because remember, we were in a disinflation cycle. There were rate cuts, but those were tailwinds. But here, when you had the rate cuts in the 70s, it was for not the same reasons. You weren't in disinflation, you were inflation. It was terrible. The wrong combination. Do not cut rates in a secular inflation cycle. And that's what's going to happen here. And yeah, look, that stuff's playing out in slow motion. I'm on monthly candles, Andy. It's like we could be talking in 1 year and it could still be rolling over. But
I think it's going to go. I think it's going to get hit hard soon. I think oil is going to outperform. I think SPX could slow down or roll over a little bit. So that ratio chart's going to move dramatically, I think.
Look at that there.
Soon. Maybe in 6 months or something like that, or wherever it is.
There's huge companies there. This company, I've been having my eye on it. They're PBR. I don't know if anybody knows this. We've been covering it.
Yeah, we know it very well.
Yeah, for our members, we've been covering it for a while. It's a $92 billion company. The dividend's just like bonkers. Yeah, I think the .A version has more dividends anyways, like 23% dividend. That's like unheard of. And people are missing out on that. All these oil plays and uranium much less, all these oil plays have crazy dividends. And usually dividends aren't that great because it's the price of the stock. The stock price has to discount the dividends handouts. But in a bull era, you get price appreciation of the stock and you get that dividend, right? So
the dividend, yep.
Win-win. And look at this thing, man. Gee,
it's ridiculous. It's awesome.
Look at this. I think it's breaking out. I told Kevin we might have to do some proper risk and reward management and offer it to our members, because that thing, if it closes here, that's a confirmed breakout above a massive wall. That's a freebie, guys, here for everybody there, because that one's a huge. That one's going to be a huge play, but it has to look at that huge base here. That's just bonkers.
Yeah. It's huge.
Yes, it's huge. And then you look at stuff like in the banking sector, which is rolling over. It's on life support. It's not doing too good. So, it's like, here's Bank of America, guys. It's just broke down from a rising trend line. Now it's below 1 year moving average, below 3 year, hanging on the thread by the cloud. Wow. That thing could just fall like. Oh, I hear an echo. I'm good, yeah. Can you still hear me, Andy?
Yeah, I can hear you.
So that thing could just fall. And it's not that Bank of America, you want to short it, but if Bank of America has headwinds and cannot go up in a sustained fashion above all-time highs in a bull era, then that favors capital flows and to go in the other asset classes that are going to price in the destruction of purchasing power required to save this bank. So it's all about, guys, identifying capital flow shifts and seeing which assets are going to outperform. Look at that Bank of America.
Usually banks outperform during inflationary periods because they're the ones causing the inflation. I bet you we go and do a double top, and I bet you then it just eats it. That's my guess.
Well, it could go up, but silver is going to go up higher. So here's Bank of America price in silver. So yes, while there was a rally for Bank of America nominally, look, I'll remove all my drawings here. I'll add Bank of America anomaly, new price scale. So here's Bank of America. I'll put in a log to make a reset chart. Okay, here it is, guys. Here you see the 1998 Bank of America anomaly rolling over here. Bank of America recovering from October 2000. It went the new highs nominally, but look what it did versus silver. It just halted here. It did a flat top.
Yep.
Maybe here you could say it's a false breakout, trapped everybody. Then after that, it just lost a much longer trend line. And nominally, while it kept going up, you had to be looking at silver because silver was breaking out versus Bank of America, or Bank of America was breaking down versus silver. And that's not good because the silver chart tracks this inversely. And after that was just a waterfall. So while you're right, nominally, Bank of America can probably go up here, all the way up here. If it's breaking down versus silver, it broke down this rising trend line. It broke down another one here. It's looking super, super weak versus silver. That's telling you, okay, fine. Bank of America might go sideways, might go up. But the lower risk, higher reward play is not Bank of America. It's silver and friends, right? Here's a wall. Look at this beautiful wall. Support, support, breaks down, goes back above, support, support, breaks down. But all this minutia, this grinding sideways, what it actually did is it eroded all the upwards movement it had. It eroded it. And people forget that this is just so vulnerable for a tumble down. It's just the setup's there for, look at that. Oh my goodness. The next time after silver finishes its current pullback there, this thing's melting. After silver finishes that melts. Gold versus SPX goes up. Tamiko keeps going up. Those oil plays, that stuff gets the headwind, the tailwinds. You know, it's like, so it's getting very close, man. This is a huge look. That could be a huge topping pattern here. The bullish case, guys.
Head and shoulders or something like that.
Yeah, look, I try not to get into much of the nitty gritty of defining those, but what head and shoulders have is they have a peak and then they have a lower high, which is slowing down momentum. The bull case for Bank of America is if ever it gets back above this line, then we have to change our thesis. It's like if that thing breaks out versus silver, that means we were wrong. It's something like that, and then we go long again. U.S. equities, we go long again. The banks, right? That's what. If that ever happens, we change
we'll revisit that top portion. That's what I think, and then I think we're going to roll over. Yeah.
So here, like this.
Yeah, like that.
Yes,
That's
yes.
what I think will happen.
Yes.
Something on the lines of that.
Yes. So that's the question. And this is the trap, guys. Patterns are only patterns once they complete. So this could be a topping pattern, or it could be just a halfway flag, right? It could just be that also. And that's why people get trapped. They have a bias, they have a narrative, and they look at the chart. Oh, it has to break down. You only know if that was a top or a continuation pattern after the fact, after it breaks out here. Oh, okay, it was a halfway flag. And if it goes down here, oh, it was a top. So guys, we don't know how high it's going to go here. It could stop at this wall and just it could do like that, or it could go all the way up like Andy maybe thinks it could happen. All you have to do, guys, is just wait for this little close here below that line. And it doesn't mean it's going to be 100% down because sometimes there are false breakdowns, but you'll have the probabilities will shift. So let's say here you take a bet that this is a top. You could say, okay, maybe it's 50-50, right? Could be a continuation pattern or it could be a top. But as soon as you close below that, instead of it being a 50 coin flip, it becomes a 80-20 or 90-10 play. So now you're the odd maker. You're playing the casino. You're playing against the casino, but with better odds. And that's what chart trading brings you. It gives you those odds. It tells you when the market participants have decided and shown you through the price action where the odds have shifted. That's the whole meaning of a breakout, for crying out loud. If you can't follow what these breakout lines or breakdown lines, this is massive support. And the more massive support it is, the more meaningful a breakdown is, because that support will become resistance, right? It becomes a wall. So that's pretty much what chart trading is. This is a massive support line. If it fails, respect that fell. Look at this. Look at that top, man. Oh, that thing here. Look at that thing of beauty here.
Beautiful inverted head and shoulders. And late 70s, early 80s.
Yes. Yeah, here.
Absolutely beautiful.
So
Yeah, that thing is beautiful.
yes. And look, you know what that looks like? That looks like the blow off top for SPX versus energy. This type of craziness right here.
Yeah.
That was probably, I don't know, we're going to revisit that. Like maybe one day we'll get some type of, here were our double bottom, their blow off. Look, we could talk about, I'll talk about capitulation volume, but here, you're right, Andy. Look at this thing. 1, 2, 3, 4, 5,
Oh, the
breakout. Yes, retest. Here you go long US equities, like so bad here. Like you go long banks or whatever, but at least you know you shouldn't be in. But you had warning signs because even before you didn't have, like, even here there were signs that in 1981 that you shouldn't be in silver anymore. They were already really starting to that violent move up. There was some signs, okay, something's wrong with the silver market there. Shouldn't have been doing that. It should have stayed below the 1-year moving average. Okay, let's look at the volume here. And this is what I'm looking for to know when Bank of America is going to bottom versus silver, or when silver is going to top. Goes down, goes down, goes down. When the volume goes bonkers, this is what I call capitulation volume. And on the inverse, on the way up, blow off tops. And this is where everybody talks about it. Oh, crazy inflows in SLV or crazy inflows, whatever. And people are getting there and they say, oh man, it's going to keep going up. Usually, if you see some type of price action like that, it's because the volume is confirming that that was the bottom. Huge bottom bounce up. Okay, it wasn't 100% the bottom, but look, it did it again here. And that was the double bottom for US equities or Bank of America versus silver. So I'm looking for that. Look at the complacency. Look at that. There's zero volume. Zero. There's nothing. This is what's astounding me right now. The complacency is just, there's nothing. Look at that, guys. There's nothing.
Screwed.
It's
Bank of America screwed.
Well, take a deep breath, guys, because right now, if ever the price starts going down here, and with this type of volume, we're not even close to a bottom until we see this. That's what it means. So there's no top. And so if the price action starts breaking down here and we don't have this crazy volume, that means there's no top for silver and there's no bottom yet for financial space for Bank of America. And on the way up, it'll be the same thing. So let's say I put Cameco. Okay, let's go back to Cameco. Look at Cameco when it tops. Where's my... See, volume, it explodes at the beginning, a little bit on the breakout, it goes sideways every time of these rallies. And the blow off top here, huge volume. It's not just the volume, right? Huge volume, but also followed by a break of important support, the 1-year moving average. Then after that, that's the end. Here, look at here, as the price went up, huge volume, slowed down. This was top. Everybody was talking about Cameco here in 2022. Everybody. And that was when it topped. It doesn't, okay, this is about timeframes. This doesn't mean it's the end game top, but it does mean that some type of consolidation is about to occur. This needs to unwind. And this is why there's still a lot of fuel tank for Cameco. Look at the volume. There's nothing yet. It's still resetting while the price is going up. You can't get more bullish than that. Once everybody starts talking about Cameco again, once the volume goes back to these levels here, then you should say, okay, I don't know, we're probably going to be here, the price above all-time highs. That's going to be a sign that we're at a very meaningful top. And at the beginning of a bull era, they have a chance of continuing, but the next one or the one after that, I don't know if we're going to get two of these. It gets trickier and trickier that it could be the end game move. Look at this thing. What a beautiful. I was just like, I don't know, man. When you saw that, you must have been screaming to your members, like, this is it, right? When you saw this candle there, like 4 months ago there, it's like, that was clear night and day that was going to rip higher.
Mm-hmm.
But of course, guys, it's not 100%, but the odds were that 2-year consolidation was done. And everybody knows in the uranium sector, like, there's Cameco, but, we could name, there's a whole bunch of stuff there going bonkers there. What's under your radar? What's
You covered quite a bit. You got, what about, we've covered gold and silver, uranium. We've talked about oil. What about nat gas? What's your opinions around nat gas?
Yeah, it's like that gas for me there. It's not ready. I remember you guys or somebody like a lot of people were starting to buy here, but for me, I don't want to be a hero. I don't know if that's a halfway pattern or if that's going to keep going down. So I had identified a wall, a historical wall where, yeah, it's about $3 until it clears $3. You need to let that 1 year moving average catch up. You need to let it. Where's my squiggly line? I need to let it show me that. And after that, there's probably a move. If ever it breaks above 316, it's probably going to run maybe all the way here to 456, but it's not doing that there yet, right? There's a lot of hurdles. So I don't like nat gas now there. I'm going to wait until this thing coils. I'm going to wait until the overbearing moving averages offer less resistance. And then I'll be able to play a much lower risk, high reward play. Because remember, there's opportunity costs. While chemical, you saw how chemical just broke out after consolidation. You wait, it's just rocketing for the past 4 or 5 months. That's what you want to be in, a shortest amount of time for the fastest move. But even all the people who bought here at the bottom, it's just going sideways. Unless you have a lot of spare capital, this is not the most efficient usage of capital. Putting in nat gas now there, you just don't know how long it's going to take before that thing decides to rip. Look where it ripped here. It was above the 1 year and 3 year. Now you're below the def cross, the 1 year and 3 year. It's not the best place to go in here. But overall,
the natural gas companies have gone up quite a bit, though. They usually trade with the
well,
equities.
there you go. Okay, so we could look at those though. If they trade more, it's true. There's one there I was looking at. It's just beautiful. It was I forget, but you're right. I haven't seen natural gas companies look like that chart. That chart looks so cyclical. It's like one of the hardest charts to chart. But you're right. When I look at XOP and just natural gas plays, they don't look like that chart. They look like the other charts in the sector. They look like PBR and all that stuff. They look like those, right?
Yep.
There's coal. Coal was I was New Hope coal. New Hope.
Yeah.
Oh yeah, that thing looks like it wants to continue there. I had my eye on it. We missed the breakout, or I think we did do the breakout. It consolidated 16% dividend, volume resetting. That thing could be continuing. So that's another one. Coal play, pollution, green energy. Like I don't care about any of those narratives. That chart's telling me it's bullish. So that thing could be. It looks like it's trying to break out that pull flag. Looks like it's on the move there.
Yep.
Look at that beautiful. Yeah, it's a 12-year breakout, 10-year breakout. Explode, pull back, let the 3 year moving average catch up. It's got everything. So yeah, that's a coal also.
Here's a crazy chart pattern if you want to see it just for the heck of it. AMR, I think.
Oh yes, alpha meteorologic. Yeah, yeah.
That thing is crazy.
Yes.
Just crazy.
Yeah, we got our members in that also there a little while back there. Sorry guys, I don't want to plug the website, but you too, we were looking at the same stuff, but that thing, the only thing I didn't like is I didn't have a lot of data, but I could have overlaid all these other oil plays, right? And that's what's playing out, right? Let's say I put XOP here, new price scale.
Yep.
Look, that's what it is, right? So I don't need much more data. It's XOP is breaking out. This one's the alpha dog. It's an alpha dog, right? It's look at that. It did what Chemical did, or Boss Energy. Did you see? Like, there's a whole bunch of these that flat top, no weakness at all, no weakness. Bam, just rocket. Powerful stuff, powerful stuff in the sector. But it's Kathy Woods. I'm so jealous. They're all getting all the attention. Michael Saylor, we're getting no attention, but that's a good sign.
We're under the radar, just killing it.
It's bonkers, right? It's like
He's
seriously
100 here from the bottom.
Jesus. Yes.
No, in 3 years, over 100 times.
Yeah. Well, even if you get in here, the risk to reward is just bonkers there.
Yes. It's all crazy here. It's just ridiculous.
Yeah. So until that works out, and I'll tell you something about this chart. It was able to explode. We could get really greedy here. It was able to explode 400%, 394% above its 3-year moving average. So I could do a little math here. It doesn't always work out that way. There's other tools to use, but if I put 400% here, my tool, I put it, here's a 3-year moving average, the red line. That's probably going to be a place where I'm going to start thinking about taking targets, depending how fast the moving average goes up. So when that thing reaches,
It's just crazy.
$600 there, something like that there, that could probably be the, yeah, that could probably be a good place to take profits. And you know what? If ever it goes up to here, that's probably when CNBC is going to start covering these plays. That's probably
Telling you
what's
to
going
buy.
to be.
So their
You have
buddies
to,
can sell.
yes. Well, we're going to be selling into that distance from moving average there. We'll be selling into that stuff, and then wait for the consolidation. And after that, see what the next plays are. But you're right. What's still on deck, and maybe we could close up with that. What's still on deck, guys? It's the gold and silver and the miners that haven't done their move yet. They just haven't. So they're on deck. And that's what's the beauty of understanding macro capital flows until SPX is able to break out versus oil, until SPX is able to break out versus the yields, the 10-year, 30-year yields, until SPX is able to break out versus producer price index, then you could have fun playing these cyclical rotations within uranium, silver, gold, you name them, copper even, we could even all that stuff. You have platinum's on deck, right? That's that. The only one that's not too much on deck is Palladium. Because I'll tell you one thing, that metal looks strangely like the SPX chart. So when it could recover with SPX, but Palladium, for some reason, when I look at it, it behaves exactly like the SPX. The gold divided by Palladium chart is exactly the SPX chart. So that's like the odd man out. But when the US equities start recovering from the bottom, let's say we're in 2009, I think that was a great place to be in Palladium because it just rocketed alongside the US equities.
That's where I bought a bunch.
You got Palladium in 2009?
So Palladiums are off. Yeah. So you got the trio, platinum, silver, gold, and then Palladium's the oddball that goes opposite. That's the other metal that I like because it goes opposite of all the rest.
Yes. So if you're anti-establishment but you want to go up with the growth stocks, then go long Palladium when SPX is doing great. You'll probably outperform even there. It just went bonkers. So much fun, Andy. So much fun.
Can't say I agree with almost everything. I mean, it's literally like side and side. And I think gold and silver is on deck for sure. That's ready to rip. Totally.
And that's why there's no rush. Ride what's hot. Then after that, rotate into the stuff that breaks out, and just rinse and repeat for the next 5, 6, 8 years, or until the charts tell us we're done. Like, who knows? Maybe this rally, we have a 15-year bull era in all these stocks there, these value stuff that I don't know. That's like in 1929, when the markets broke down versus inflation, it took 15 years before they bottomed. It was just like so slow, the bottom. Maybe now it's faster because they'll print money faster and they'll destroy purchasing power faster. Like, there's probably that mechanic inside, but the charts will tell us there. It's like, just look at the charts, and when that momentum's done, it's done. Good stuff, man. We gave away too many picks, Andy. We talked about too many high value actionable charts. We have to stop doing that.
Yeah. Well, yeah, there's some good ones in there. Some solid ones for sure.
And there's more, like, yeah, good stuff. Well, I'm happy to see that stuff working out finally, because on the patience, I feel it. A lot of people that position early, it's hard on the emotional capital. It's like, it's like, how come that thing's not taking off? It's pulling back 10%, and it's tough, And even in a bull run, guys, there'll be corrections, and you're going to start doubting yourself, right? But
that's awesome. I don't really have anything else because we basically covered all the high points there. Great work. Awesome. So if someone wants to reach out to you, follow your work, how do they contact you or follow you?
Yeah, well, Bad Charts One guys on Twitter, all this stuff there's there, and of course, I have stuff for members only on northstarbadcharts.com. All the stuff we talk about there, but like in more details with risk, money management, and all that stuff. But keep learning every day, man, and sharing, and hopefully this helps out your viewers that get a hear about, read about stuff that's not mainstream. Because by the time it's mainstream, guys, it's probably too late. Jesus. Remember the BlackRock thing? Gold is dead. Not BlackRock there. Grayscale, gold is dead, all that. That was exactly it when Bitcoin peaked back in 21. So
Yeah, they gotta create demand so their insiders can offload on retail.
do you think they like I try to give them
I think they
credit.
do
Like,
that.
is it that
I think
Machiavellian, or do you think they really think about it that way? They
yeah,
call
I
it
think they
creating a liquidity exit, right?
yeah, I think they're actually doing that to some
Wow.
degree.
That's nefarious.
To some degree.
Yeah.
So, all right, that's all I've got, guys.
All right.
Anything else, Patrick?
No, just show the
Oh,
pipes.
oh man, he's got the pipes going there.
Oh, and it's just push-ups.
All right,
Ciao,
guys.
guys.
We'll catch you later. See ya.